Session of Masterclass Made Easy with Professor Koh Chin Min of the National University of Singapore. And for those viewers who are new to us and new to her, let me also mention her credentials and why she's the authoritative voice for Singapore in terms of personal finance, wealth management, and also a business financing situation. So Professor Koh, 30 years of expert, 30 years of industry expertise, that she's actually the corporate trainer, the sought after a corporate trainer for Fortune 500 companies and also for MNCs. And some of these names, we know them. We're talking about Mitsui conglomerate from Japan. In Singapore, we're talking about Senoko Power, and also Swiss companies, ABB, and also British, Boeing. So we're talking about all these companies, plus also not forgetting BP, British Petroleum, and all these are big brand names. They don't go to her for nothing. Ladies and gentlemen, we are borrowing her time and we owe her a lot of money for every minute that she spends online with us. So I must catch her, I must have her, and therefore it is such an honor for us, ladies and gentlemen. Please reshare this video, because we don't want to be spending time on consultant money in a time whereby every dollar should be going into your workers, yourself, your investments, and also keeping the lights and keeping the utility going. So therefore, the purpose of our show is very important. We are giving back to the community in Singapore, in Asia, and also to the wider community in the world, in America, where the audience are. And I want to thank Professor Koh for her relentless passion serving Fortune 500, but now serving the Main Street businesses. And she has a heart for the Main Street people, for her lives that she has shown. But as the series goes on, you'll find about her philosophy of life, and she's fighting about the philosophy of life, and what keeps her excited at night, and what keeps her excited about the next millennium as we're going along. So a little bit more about Professor Koh as you follow us in the next few episodes. She's going to tell you about where you can find her, ladies and gentlemen. So we're going to dangle that carrot in the air until you follow us throughout the episode. So Professor Koh, thank you so much. Professor Koh, would you like to say hello to the international audience?
Hello everybody, thanks so much for tuning in, and thanks Vicky for the introduction. I think I'm so humbled, by standing next to you, and thank you once again for this opportunity.
Ladies and gentlemen, today is the 3rd of September 2021. It is 5:56 p.m. Singapore time, and you may be tuning in with us in Indo-Pacific right now. Malaysia, Thailand, South Korea, and Australia, where some of my viewers are, and also Ukraine, because you write to me. But if you're in America and you're looking at this video tomorrow, next month, next year, ladies and gentlemen, do not worry, we're going to be here for you infinity, because this is the infinite world we're talking about. So we're sending out our power, we're sending out our information, whatever we knowledge, and not keeping it, and giving to the Main Street people and the Main Street businesses. Such a beautiful time that we are giving back, and also as ambassadors of Singapore, we are giving back to the community in every way we can in a humble manner. And if there are people who would like to write to us, write to talk about live777 at gmail.com to myself, Vicky Esther, talk about live777 at gmail.com. Tell us that you would like to participate and show me your questions and your queries for Professor Koh. And then, as we go along, she's going to tell me more about her consultancy services, where you can find her. And then we'll probably do a segment where you can actually call in and send in your essay, send in your real case studies where she can actually answer all these questions to you. So ladies and gentlemen, not to take up too much of Professor Koh's time, because she's paid so much by the hour and she's giving to us complimentary. So I'd like to have Professor to take it away for two parts of our very important 30-minute session here. The first part is about some of these words we read in the business times in Singapore. I myself is a very reserved, conservative person. I don't invest a lot in things that is volatile, things that I do not understand, even though I'm financially trained, I have got a degree in accountancy, but I'm still conservative. And there are lots of words that's always coming up. Cryptocurrency, Bitcoin, Binance. But let's go back to what's classical right now. Bonds, coupons, shares, and stocks. But today particularly, let's talk about bonds. What are bonds? Because Temasek Holding just came out a couple of days ago that they're releasing 50-year bond to the marketplace. Bonds versus shares. Now, to the people who are upgrading themselves, you're reading the news, what are they? We know what shares are. And of course, shares are different types of shares. Convertible, non-convertible, convertible, premium, etc. But let's talk about the big broad sums of bonds. And what's the implication of Temasek Holding, a sovereign fund of Singapore, issuing a 50-year bond to the public? And what are the pros and cons? But because let's go into a deep dive of 3 days, 3 months of session, I just want Professor Koh to give us 3 sentences for the definition and probably 5 slides to tell us bonds, what they are, coupons, what they mean, the shares, what they are, so that we don't look like, when we read the papers, we kind of skip a few pages. That's what I do. So I'm so glad to have Professor Koh demystifying bonds. And then also the second part talking about Main Street businesses concepts that you can use about weighted average capital credit. If I get that right, it's a mouthful, but we're going to break it down to make it applicable to everyday people. So Professor Koh, I'm going to make you the host right now. Hopefully you give me a lot of your education, and I hope I represent the public, and if I do ask questions, I hope that you can demystify. Thank you, Professor Koh. You're the host, and take it away, Professor.
Thank you so much, Vicky. Whatever I'm doing now, giving back to society, is just a little bit, and the minimum I can do for everybody. So it's my pleasure. It's indeed my pleasure. So let's an antique.
Wow. That's an American bond, right?
This was a bond called Liberty Bond, issued by the Ministry of Finance under the instruction of the national government of the Republic of China.
Oh, Republic of China.
Yes.
Okay, Republic of China is Taiwan. All right.
Republic of China. I think it's probably from China. Yeah.
Could you continue with that?
Yeah, and the amount is $500 million. All right, with the fixed coupon, right? So everybody's wondering, what is the meaning of coupon? There you go.
Wow.
This is really, signed.
Coupon.
And I saw the original one. It was kept in such a good condition. It is like those days when we were younger and somebody give you a string of coupons, and with each coupon, you have the rights to go to the right place and exchange it for money, So this coupon, which I'm going to launch and show you in a while's time, the meaning of bond. Bond means that it is something that gives you a right, all right, to claim. When I buy a government bond issued by the government of Singapore, it is a very nice way of saying I am going to lend money to the government of Singapore. And if the issuer, the borrower, says I am issuing X dollar amount for 50 years, it means by buying my bond, you're lending money to Temasek for the next 50 years. So what you can see here can be represented by 3 letters. It's called IOU.
Yes,
So
IOU.
Yes, Vicky, if today you decide to buy $100,000 worth of the Temasek bond, it means that Temasek will write you and say, I, Temasek, owe you, Vicky, $100,000.
Yeah.
And I will repay you only in 50 years' time.
Wow, that's a long time. Am I still alive?
No, we can do it this way. The financial market has evolved so much that if any time you decide to sell the bond, Vicky, sell it to me.
I see.
That is the secondary market.
Okay. The concept, Professor Koh, I clarify before you go into the deep dive. Ladies and gentlemen, you have actually shown the real coupons. The coupons is within the bond. And if you need any money like myself, I will tear up one little sheet and sell it to whoever who wants to buy that bond coupon. Am I right? So
maybe
that has a form of liquidity.
So maybe I can rephrase it, Vicky.
Yeah.
The Liberty bond, if I decide to buy 100,000, and it's going to pay me something like 5%. In the case of Temasek, I think they are paying 2.8% per year.
Wow.
So for every $100 or 100,000 I have, every year I'll be entitled to 2.8%. Okay. So that means I will get $2.80. But Temasek says I will pay you every half a year. So you will get $1.40 for every 100. So this is the coupon. At the end of each 6 months, you can present it to the registrar who takes care of the disbursement of funds, and then they pay it to you because you rented your money to Temasek. So that's the idea.
Very clear. Thank you, Professor.
And if I am a happy owner of this bond, I can go on and on. It's almost like a perpetual. But at the back of my mind, I know that I can always sell it to the next person. Like we put up things for secondary sale. You know, in Singapore, we have one very famous platform called a Carousel. Yes. So I can sell a pre-owned bicycle. Now I can sell a pre-owned bond issued by Temasek. Yeah.
Get it?
Yes. So it gives you an opportunity so that in case, all right, you got some spare cash, but because of our limited knowledge in the business world, you do not know where to park your money. So here comes the chance. So the chance is for you to park the money with a very well-known and credit-worthy borrower. So I'm going to show you. How do I know that this borrower is credit-worthy? That is the one.
Okay, and to stop you, Professor Koh, I'm going to raise my hand like a student. Now, we see a lot of this every day, like Moody's rating, right? Because we see it during the crisis, pre-pandemic time, suddenly the Moody's rating for China went from AAA to BBB, for example. And then you get to wonder, like, what is this? What the F is this? You know, so I think you actually put it very well in a chart, ladies and gentlemen. Please listen up to Professor. She's going to demystify what you hear on Bloomberg, what you hear on CNBC, and you don't know where to ask these questions. You're too embarrassed to ask. So, Professor Ko, take it away. Tell us, what is this chart?
Well, if you just take a glance at this table, there are many credit rating companies, of which, like what Vicky said, Moody's is one of them.
Yeah.
S&P, which stands for Standards and Poor, is another one. And then Fitch. So, it's like an undergraduate who aspire to get a first-class honors.
Yeah.
So to get the first-class honors, you need to get, for example, 3 A's, and that is the tip-top rating. So that is AAA rated.
Yeah.
So is this AAA rated. We call this the highest quality, and it's definitely an investment grade. But should you get only 2 A's, then maybe you are still quite good quality, worthy of investment with very low risk, but you rank number 2. But that's still good enough, all right? And the higher the rating you are, the better and the more stable financially. Therefore, the issuer, like Temasek, can afford to pay lower interest rates.
Okay.
So if today I graduate from the school of from Harvard University with a first-class honors, well, I'm of that grade. And therefore, hopefully when I get a job, they will pay me the top grade salary. It's the same idea here. So there's a chop on the head that says first-class honors from a certain university. This is AAA rated from Moody's.
Yes, wonderful. Now I get it.
Yes. And for everybody out there, when in doubt, just remember, you could go as low as BBB, because BBB is still in the category of a safe investment, although it's a medium grade, and therefore you will be paid slightly higher coupon. So the coupon is like interest rate. Imagine I walk into a bank today, and then I place my $100, my $1,000, and you say, look, Mr. Bank Manager, I think I don't need this money for the next 1 year. Can I park it with you? So I'm renting this money for you to do business, and then you pay me back a rental. That's called interest. So that's called the coupon. The coupon.
I see. That's a coupon.
Yes. It is something, the coupon means interests. The little coupons that you saw gives the owner of the bond the entitlement. At the end of every 6 months or every year, you use this like a receipt, like an evidence to say, I am the legal owner of this bond, and you pay me the rental, the periodic interest rates, the periodic interest.
Sure.
So it's as simple as that.
Yes.
But Vicky, in this day and age, we no longer hold the physical coupon and the physical certificate. Everything is digitalized, and therefore your ownership is recorded on a platform whereby it can be certified that you are the legal owner from this period to that period. That's how it works. So that's bond rating. Now, I remember just now, Vicky, you mentioned something about how do I differentiate the bond from the shares? Wow. Let me do this demonstration. All right. If I step back, I will be taking a risk much, much, much higher than a bond if I buy a share. A bond holder, all right, is somebody who has got lesser appetite for risk. And therefore, he stands right in front of the company called Temasek. Temasek has to drop everything. At the end of each 6 months, one of the priority is to pay the interest to me. So my coupon is my interest. I will rank first. So my risk is lower. But if I should decide to buy an equity in a share, let's quote our share. I mean, the world knows about our SQ, our Singapore Airlines company. So if I were to buy a SIA share, or it is a far cry from buying a SIA bond, because SIA has also issued bond this year. And the shareholder of a SIA company will stand really high, waiting and hoping and praying that if all the other people who ranks in front of the shareholder has been paid their
Yeah.
due interest, and then it goes to the shareholder.
I see. That means shareholders are the last in the queue, aren't they?
That's right. You said it. It is last in the queue. So imagine I have a food ration. Do you want to be at the front of the queue, or you want to be the one at the back, subject to while stock lasts, while money lasts? I don't want to stand behind because I've got low appetite for risk. And therefore, I will take it safe. I will play it low risk. I will lend money to the company. I don't want to have a share in the company. That's how the name came about. I don't want to have a share. Yeah.
Wow.
So share means that as a shareholder, I've got huge appetite for risk. It's like some people who go for buffet dinners. They can eat a lot. All right. So then go for it. But if you're somebody who cannot take so much risk, then limit yourself to just being a bond holder.
Yeah, sure. Yes, wonderful.
The way to differentiate it is, if I'm a SIA bondholder or a Temasek bondholder, if I hear in the market, in the stock exchange, in the newspaper, that maybe this company has some financial difficulty, then I would be able to be entitled to the distribution of the assets should the company goes insolvent.
Yes.
In America, we call it file for Chapter 11.
Yes.
Yeah. But if I'm a shareholder and I hear this, I must be mentally, prepared that I may not get my money back.
Okay.
Because during those good days when the companies were
because you're at the end.
Yeah, you are at the end, but the end also means something good. If you hear me right just now, Temasek issued the bond in August, early August, for 2.8% per annum.
Sure.
And that is fixed.
Yes.
So if Temasek, with all the investment in all the operating companies, if they do well, a bondholder only gets 2.8% fixed.
Yes.
They don't get any more than that.
Yeah.
And then the rest of the profits which the company made will always accrue to the
shareholders at the back.
Yes. So the opportunity of earning a lot of money as a shareholder is only fair because during bad times, I get less. I'm the last in the ranking. And I can't sue the company because I own the company. Do I sue myself? No, I don't sue myself.
Yeah. So Professor Koh, just to paraphrase what you say, my understanding is this: bond holders, they are low risk. They have low risk appetite. They are in front of the queue, and they've got a fixed rate.
Yes.
Right. Shareholders have a higher risk. They got to take higher risk, and they got to go to the back. But because they're also taking higher risk, it means that they have a possibility of upside.
That's correct. That's correct. You are so quick. It means that they can potentially benefit during good times from all the surplus. It's really the surplus. So as a residual owner, just like if I buy Apple shares, all right, if you have followed our previous recording, you would have seen that the Apple owner really make a very huge return of 88% of return on equity. Yes, so that is the upside.
Wow, wonderful. I think you demystify in 5 minutes.
Yeah, so when somebody says I own a share, you literally own a portion of that company's assets. Yeah. So imagine you are sitting in the SIA aircraft ready to take a flight to Germany, from Singapore to Germany, and then you think about it. This company currently has got more assets than the liabilities, as in like they own more of these machineries and aircraft. After I pay off all the people I owe money to, whatever is left on the chair, maybe the leather chair, you own a piece of the leather chair because you're a shareholder.
One of the owners.
Yes, literally. Yeah. So maybe Vicky, if you have any more questions about bond versus share, bring it on.
But Professor Koh, the concept of shares is a common knowledge, right? We buy the shares of Apple, we buy the shares of SIA, and also recently SIA they're going to issue bonds, right? I think last month when the new minister took over, and some of these concepts they are everyday in the papers, but I think your clarification makes it so much better for many people, because a lot of people go in there just wanting to get money out of it, not wanting to know the concepts behind. And you have demonstrated that it is very important for us to know, because when you have the money, you're either going in there and you're being approached by the bankers for your wealth management. You have to at least know what they are. And this is also one of the glimpse of some of the episodes that's going to come up, where I will ask Professor Koh, what instead of going to a broker to manage your shares as a retailer or someone who's going to get in, how do you actually study the financial statements? What are the ratios you need to look at? What are the PE ratios you need to look at? Some of these very distinct ratios that the common people should know of, and not just depend on the broker, right?
Certainly, those are the fundamentals. Yes,
we need to know the fundamentals. That's right. So this is another episode. What's coming up? It kind of like builds up, Professor. I'm so glad that this is going to be in a public, and this is in a public arena. It's free for people to understand, and they can always write in to Professor Koh through me right now without divulging her privacy and confidentiality. Right to talk about live777@gmail.com. If you want to talk to this authoritative voice in Singapore, Singapore's authority on personal finance, wealth management, and also company financial structure. Professor Koh, would you go into very quickly second part, which is so important because we're talking about WACC, and what is it? Tell us, and how does it apply to us? Me, myself, probably myself as an employee, as an entrepreneur, as someone who's going to buy a property, get a mortgage, someone who needs to raise funds for my working capital. What is WACC and why is it important, and not go in blindly to borrow funds?
Sure.
Professor Koh, take it away.
Thank you so much, Vicky. Here we are. So as she mentioned, this thing about WACC is actually just an acronym and an initial for weighted average cost of capital. All right.
Weighted average cost of capital.
Yes. And before I go into that, we can always go back to the fundamental presentation of a rectangle representing the balance sheet. Now, just as the name suggests, balance sheet is referring to something that balances all the time. The left-hand side will balance with the right-hand side. Now, I'm going to do this so that you can see this is my assets on the left-hand side. So it's the LHS. Now, on the right-hand side, these are the sources of funds. When Temasek raised funds from the public at the specified fixed interest rate of 2.8%, and because it's a 50-year bond, and they were rated as AAA, they were rated as AAA because the longer the tenor of the bond, it means they are willing to pay you a higher interest rate to compensate you for liquidity.
I see.
All right? Yes, so this is really a very good return to the investors who these days find it very difficult to earn sufficient interest from the bank deposits. So if you were to consider this as Temasek, they will use some part of their own money. So this is the own money, and the opportunity cost of own money is high. It could be 10%.
Yeah.
The cost of borrowing money, if you recall, I was doing this going back into the
Yeah.
front. The guys who are going to buy and lend money to the Temasek will be called the bondholder.
Bondholders.
And therefore, they only ask for a relatively lower interest rate because they do not own the company, they lend.
Mm.
So if I can take,
I see.
yeah, so low risk, you ask for lower return.
Mm.
Higher risk, you ask and expect a higher return.
Mm.
So if you look at the slide just before this, I'm going to bring you through something as basic as A, B, C. Allow me to write, all right? We tell our younger investors it's as easy as A, B, C, but don't stop there. D and a E. So this will be in my subsequent episodes. I will then explain what is, how do I analyze a company's DE ratio? So this is other people's money.
PE ratio.
Yeah, it's called a DE ratio. So it is the debt.
DE ratio.
Yeah, it's not
debt to earning. Is that debt to earning?
Debt to equity.
Or debt to equity.
Yeah, so it's about balancing the very relatively hotter money. All right. So imagine this water here that is kept in the hot bottle at 100 degrees Celsius. And another one which is relatively cooler at 20 degrees Celsius. I pour equal amount of water into the company, and these are all the funds. The money, the water is the fund. Now we use our sense of logic. When we mix the water in equal proportion of 100 degrees Celsius and 20 degrees Celsius, we end up with an average temperature
of 60 degrees Celsius.
So here's where the concept of WACC comes in. It actually means if I put a weight, the weight here means the proportion. The proportion here is 50% of hot water.
I see.
Another 50% of hot water.
Wow, so very good concept.
Yeah. And you know, Vicky, just allow me to bring my 2 cups. This is my hot water.
Yeah.
It's shining yellow. This is my cooling water. I'm going to pour equal amount into a tub. I definitely won't get as high as 100 degrees Celsius, nor as low as 20. It's going to be homogeneous, 60 degrees Celsius. But think about it. If I can mix water to get the temperature that is fit for taking a bath, why don't I pour in a few more bottles of the cool blue? And it's all 20 degrees Celsius. And if you think about it, because I put more of this proportion and relatively lesser proportion of hot water, my water won't be as hot as 60 degrees anymore. It will only be 40 degrees Celsius. So this is where I say the weight. The weight is the proportion. This is 1 unit. These are 3 units. So it takes up 1 out of a total of 4. And this takes up 3 out of a total of 4. That's where the word weight,
average.
Average.
Professor, now that we are into this, and because you know time is of the essence for all of us, I wonder myself now, I'm looking at this slide as a shop owner, as a fashion shop owner. Are you trying to explain to me the concept that I need to balance the amount between having certain sources of fund that I actually borrow, like a liability that I need to repay back, or certain equity that I need to inject into the company. Right now, this concept is very important because a lot of business owners, I'm talking about those small auto entrepreneurs, you know, your mom and pop stores, or even, for example, a lawyer who's now opening a chocolate cake shop down the street. You know, a lot of people are just re-paradigm shift. They're pivoting. They were doing an engineer's job. Now they're opening a pastry shop. Now these concepts are new to them, right? And I think it makes it very worthwhile. So look at it like what you say. Yes, we need money to operate a business, right? You're trying to say this, right? Money
Yes.
to operate.
Yes. I use
On
water
the
to
one hand, we
represent
can
money.
inject our own money, like what you
Yes.
say, own money, OM. The other one is OPM, which is the liability, right? Okay, how much do I have the OPM in order to actually balance this two to get the maximum out of it, right? So how do we operate that, Professor? Could you go through the slides?
Yep. So after
Yes.
having understood
Yeah.
what is the degree
So
of...
am I right to explain that?
Yes, yes. And you use a very good word. I'm going to steal that word from you. You use the word balance. I have to balance the proportion of my own money, because every dollar of my own money indicates my commitment in the business.
Yes.
But yet, I do not want to use too much of my money, because
yes,
my money has got high opportunity costs. It's really high, because I'm going to stand behind, last to receive anything if the company does well, and lost everything if the company doesn't do well. So that's very high costs. All right.
And this is a very important concept. I think we should pause a little while to dive into, to make it applicable. You know, because I read so much on Facebook, Professor Koh, you know, restaurants. I read, because you in Singapore, they've got so many Facebook groups, right? A lot of them is about hawkers, restaurant, F&B, saving them during the pandemic. I mean, their owners, they say that they are literally losing like millions of dollars for the last 15 months, now almost into the 20th, 18th to 20th month. They are talking about, number one, like what you say, the cutthroat fixed cost of rent. And rent in Singapore, you're talking about real estate. Right, the shop front is a real estate we're talking about. And you were talking about that, and owners will say that they are losing like up to 1.5 billion Singapore dollars we're talking about, and they're feeling the pain, and they're always questioning, should I go on to another month? But I was thinking that if they had your concept, anybody is going into the business. Even before you dive into and open a pastry shop, you want to go into opening a cake shop. You know what's going in Singapore right now? It's like people are going into the open cake shops and pastry shops, cafes, you know. I think this concept is so important. We always need to pause and sit back and really evaluate this concept before we even dive in and put in, you know what, our hard-earned money that can go to the children's education.
Yes, certainly.
We were talking about people who are bringing up like $500,000 just to start up a business, not knowing what's going to happen. And without your concept, I don't understand how people can just put in blindly like 100,000 and burn it in rental, right? Professor Koh, could you tell us why is it so important before anybody pivots themselves, you know, because they've lost their job as an engineer, they lost their job because the companies are closing down, they're leaving Singapore, but they're going to the next pastry shop. You know, this is a concept I can say, hey, hold on for a while, you need to study these videos from Professor Koh. Professor Koh, tell us, what does it mean to understand this concept for people who are about to go into a business?
I think maybe it boils down to a degree of preparation, having adequate knowledge, doing analysis. You know, some of them says, oh, why am I analyzing until I'm paralyzed? You know, you suffer from paralysis because of over-analyzing. But I think in every business, you really have to have adequate preparation.
Yes.
So a lot of the energy could be, disproportionately placed on selling. But the knowledge of finance is important as selling.
Wow, I think you hit the nail on the head, ladies and gentlemen. Maybe we've got the authoritative voice here. Business is not about selling.
Business is really about balancing the knowledge of not only knowing how to sell, how to manage when you sell, and you have to sell as much on cash as you can.
Better and using your resources.
Yes, and if you recall, yesterday we talked about negotiating with the landlord. It doesn't have to be 2 years. How about half a year? I'm a startup. You know, I'm willing to pay you variable rents. If I do well, you take a bit more. If I don't do well, you go along with me. And if you can negotiate with your supplier who always wants you to succeed, that's the best person to be in strategic alliance with.
Yeah,
That's how
so
we
can
do
we, yeah,
partnering.
Professor Koo, can we go back to your slide? Like if
Certainly.
now in a real sense of the word,
Mm,
if now I am thinking about, oh, okay, the F&B business is booming because the delivery and there's the apps, you have and you have all these people just queuing up there trying to take your food, right? Because it's all about delivery. But I think before we even start pondering about, how much money we've got, maybe we look at your bank numbers and we say, oh, I think I can afford 100,000. I think I can afford 200,000 to burn to go
to
into this
burn. That's right. To burn.
industry. So I think your advice is pause, stop, hold the horse, right? We
Plan.
cannot go into a business to say that I've got $100,000 to burn. That's the wrong concept. But we're saying that what can we get out of 100,000 that we've got to get the other amount of maybe 4 times or 5 times to balance this 100,000, so we don't go in blindly. When things go wrong, you take 100% of the heat. Right? Am I right to say that? So,
Yes.
Professor, I think this concept is very, very important. Tell us a couple of more slides to concretize.
Let's say a property where I intend to rent it out, yeah, for rental. That means I turn it the other way around. Or I am earning a business, I must compute what is my potential profit margin, what is my potential return, as in the form of profit on my investment. So the number that you quoted just now was 100,000, which you place perhaps to invest in the fixtures, the furniture for the cafe. But we have to think about it. With the 100,000, are you able to generate enough profit? So here's how it goes. All right. When we calculate what is my percentage of return, so that we can get a number. The number could be 5, it could be 6, it could be any number. We must first be prepared to compute. Here goes my sales. If my sales is 100,000, it's $1 million. What is my cost? Have you done enough homework about sourcing from the cheaper source so that the cost of sales is low? And then what kind of margin of safety I have to absorb the exorbitant advertisement cost, rental, salary? Have we thought how we can pay our staff a variable cost? They get a base salary. If they do well to bring in more sales, they will get what I call a bonus. That would really incentivize the people who are in your company. They really feel like they own a part of the business, because the more sales they help you to get, they will be getting a lot more bonus at the end of the month, instead of a fixed cost called fixed basic salary. And then
for the next 2 minutes or so, Professor Koo, can you detail with us the highlights of this importance of the income statement of the fashion company?
Sure. When a company goes out to sell, they will probably do what I call homework. If they know that the cost in the market is about 60 cents, all right, we can call it 60 cents, 60,000 or $60, they will do a markup. The markup has to be in line with what market dictates, because you are going to sell short if you sell lesser than what the market is offering. Neither are you going to get the market share if you price yourself out of the market. So it's about market
the price.
Yes, it's the market price and supply, like we do basic economics.
Yes.
So this is a very vertical and straightforward detail of, when doing business, have you done sensitivity analysis
Yes.
on what if besides the Delta variant, what if I get
Yes.
a mu? Now we're talking about another type of mutant. It's
Yeah.
no longer alpha, no longer delta, it's called mu. What if I cannot derive and achieve my sales of 1 million? What can you do? Do you have enough deep pocket to last for the entire 1 year for which you have
Yes.
signed your rental
Wow.
agreement? And then you will be shortchanging yourself.
No, I think Professor Koh, this is such an important lesson. You know, a lot of people are actually trying to pivot, right? And this is real. We're talking about unemployment levels now. We're talking about re-employment, right? We're talking about people who are trying to seek employment for themselves when there is no employment around. So what you are telling here, people who want to like dig up from that piggy bank right now, that 100,000 to dive into opening a kiosk, for example, right? A takeaway corner for breakfast or something. I think before people do that, they must do their homework and not just looking at, okay, how much money I've got. Definitely how much money you've got, but I think you talked about weighted average cost of capital, which we can always explore again because there's so much concept in it, and today you touched on it. And also income statement, like what you say, sensitivity analysis. What are the unknown factors that's further going to disrupt your company? And you know, we are in a disruptive world right now. 100,000 is going to burn you right through your pockets in 1 month when you see there's no sales coming. Are you able to going to bring up another 100,000 and burn again? And there, I mean, we're talking about real money, Professor Koh, right here. This is real life. We're talking about real life here. We're talking about people. We look at Facebook now. People are starting their businesses, right? You're talking about people. Oh, people are starting businesses in the hawker center. They are like redesigning. They are like bringing a brand that is old kopitiam style and making it to a cafe style in the hawker center, right? I mean, a lot of people digging money from their piggy bank, and I'm trying to say that the money that you have in your pocket is finite. But if you can find a way to borrow from the bank, it probably can stretch your dollar, and the banks have infinite money.
That's right.
I think that's what we're trying to say. And also your income statement for demand and supply is so important because you're talking about pricing. Not too low, not too high, because there's an impact. Am I a good student for you, Professor?
Very much so, Vicky. Thank you. It's been so interactive that, you know, if you can ask even more questions, because I have projected a hypothetical situation whereby that business owner is so excited about the net profit he's going to make, and then he forgot, if I made 0.03 of a million, which is 30,000, does it even make sense if I have to invest amount of assets into the company that is worth 1 million? If you recall, that was my investment. If this is $1 million and all I get was an amount of 30,000, I'm actually getting in return for my investment 3%. But, you know, I would have done this, source my loan at 2%, but use my piggy bank, my own money that is very precious. Actually, my average cost is 4%. Why are we getting a return of only 3% when the cost is above 3%? It does not make business sense. Not even dollars. Not even dollars.
So I think, Professor, you have actually tied the whole story together now, and I think you hit the nail on the head. It is not too difficult if you are able to just explain the concept in the last half an hour about weighted average cost of capital, anybody can just sit into this show and this class and do a quick calculation. How much are they going to project, to get their returns on their investment? Without further ado, would you like to wrap up in the next 10 seconds? And I hope that this is going to be like a hook for the next episode for people to tune in to Professor Koh.
Yes, this picture is prepared in such a manner that if you could just appreciate what you see there, highlighted in green, weighted average cost is definitely 4%. We compute it like the way we do our hot water, cold water. Average temperature is 4 degrees Celsius or 4% versus what I get, which is my benefit. When I make money, that's my benefit. I get in return 3%. It doesn't make sense. Now, if somebody comes up to you and challenge you and say, look, you are getting 3% return versus a borrowed money of 2%, then he has omitted the opportunity cost of my piggy bank money. And that money is my equity and so precious because I'm taking such a high risk, queuing up all the way behind. If my business do not succeed, I've got all the risk to bear. Therefore, I should put a price tag of 10%. That's how I work out 4% weighted average cost of capital.
So with that, thank you so much, Professor Koh. Would you pull me back as the... Okay, thank you so much, Professor Koh. That's a wonderful lesson, and I hope I've been a good student for you.
You have been most interactive, and it's really fun, Vicky, to be here on air again, meeting my target audience. Thank you, everyone, for spending time with me in the past half an hour. Thank you.
Thank you so much, Professor Koh. You've talked with us about bonds and shares, and now weighted average cost of capital, where the SMEs and the retailers should use, and people who are thinking about going into a business. Hey, hold your horse. Do some homework first before you're happily going into to say, oh, this is going to be my new project. You will be happy now, but 3 months down the line, you'll be thinking, is this the right decision when things become uncertain? So thank you again so much, Professor Koh. I will see you very soon for our next 5th Masterclass Made Easy, Your Money, Your Life with Professor Koh. Let's give Professor Koh a round of applause.
Thank you, Vicky. Thank you, everyone.
Bye.
Bye.
Your Money, Your Life, featuring Professor Koh Simit from Singapore. Brought to you here every week by dmetropolis.com and Lifestyle TV USA.
Hi, ladies and gentlemen. So thank you, ladies and gentlemen, for being with us. The second episode with Professor Koh Simit of the National University of Singapore. And for a lot of international viewers, particularly viewers in America who are tuning in through Lifestyle TV USA, the #1 professional podcast TV in the United States, awarded by the Telly Awards, the authoritative award. And thank you, Dr. Moby, for being the sponsor of this show. I'd like to introduce Professor Koh to those who are tuning in to the second episode of her show, and this is Your Money, Your Life. And for the first two episodes, yesterday and today, we're talking about giving back to the Main Street businesses, the Main Street entrepreneurs who are finding it really struggle in this pandemic as they're struggling to pivot and they are thinking, whom should I seek help from when the bankers are not there, the bankers shut their door in their faces and they can't seek help from their neighbors or their families because everybody's on the same lifeline. So we have the wonderful co-host with me, Professor Koh. She is one of the best sought after top corporate trainers of Fortune 500 listed companies in the world, and we're talking about brand names like Citibank, Swiss ABB, which spans throughout the world, and also Mitsui conglomerate, Japanese, and also local companies like Senoko Power and all. And her experience spans over 30 years in the corporate world, plus giving back to students in the academic arena. And all these students that she has groomed that rise from the bottom to the top from her hands. So she's also a mother to these students that she helped to groom. And she's got such wonderful accolades in the schools, from the students, from the university and the schools, and also from her corporate clients. Ladies and gentlemen, let's welcome Professor Koh from Singapore to you. Professor Koh, take it away.
Thank you so much, ladies and gentlemen. It is also this lady, Vicky, that I should give thanks to for the opportunity. And if you have followed my talk yesterday, part 1, you would have realized that I was concentrating on 3 legs of this 3-legged stool called the financial statement of every company, be it SME or even the MNCs. So as a sequel, you may like to sit back, relax, and take a look at the power of leverage. Because in business, besides having good cash flow so that you can pay as and when your debt is due, you must also squeeze the best out of a deal, not at the expense of anybody else. The businessman will still use their own money and whatever that is available called other people's money, especially in pandemic times like this. We know that in Singapore and many other parts of the world, the governments are giving full support for availing the credit. So I'm going to show you how you can make good use of the availability of other people's money.
Thank you so much, Professor Koh. Let's dive into your beautiful PowerPoint slide, and I'm so impressed that you actually stayed up the whole night just to do this for the audience, to pay it forward to humanity. You know what we're doing right now is really giving them tips and useful tips, not just about saying, okay, we're going to help you, but sometimes help comes in different forms, right, Professor Koh? So without further ado, let's dive into your slides.
Precisely, Vicky. Help can come in useful advice, and I really am enjoying every bit of it since yesterday's part 1, that the little that I can do is really to share. That's all I need to do, because these are the things I not only talk to my clients, the MNCs, the SMEs, the medium-sized companies, and also listed companies on Singapore. It is actually a very simple concept called the power of leverage. Now,
tell us, Professor Koh, I'm all yours, and I'm so excited for your class now. Let's listen to the master class, the master herself.
If you talk to anybody who walks on the street and you ask them, if you have a little bit of capital, as in cash, what would you do? They will say, I would invest in a company. I can run a company. I can buy a share that is listed on the stock exchange. And here we go. They are trying to maximize what I call highest level of return, as in what they get back on the amount that they invest. So in the accounting term, of course, we call it total assets. But to a layman, it's just what is my return on investment? So the investment is actually referring to what I invest in the assets of a company. So I can be a small company or I can be a big company. Now this company is called Apple. I thought it would be nice to take a glimpse at what a successful company like Apple has done. Now I have highlighted.
Professor Koh, as an audience, even though I like it so beautifully in your slide number 18, but because the words are quite small, maybe we change it back to the wonderful slide here. Yes, thank you, Professor.
Thank you, Vicky. And for the benefit of those who are viewing this and squinting their eyes, I have already highlighted the two important points. All right. Yeah. When a company makes money and do a business, they are concerned with whether they have sales because that is the source of most cash flow. So Apple has brought in the sales in 2020, ending September, 274 billions. And if you look just all the way down, skip everything until you see what is at the bottom here, it says they made a profit of 57 billions. So this is how a businessman will look at. I've got a good profit margin, but am I getting what I am expecting for the money that I'm investing? So here is what I call the balance sheet. It is one of the three legs in the financial statement. And as usual, we only zoom into the important items. So if you take a look there, it says there 333.88 billion. Well, that is a lot of money. But guess what? Apple has so cleverly made use of other people's money. And you can see this is what I call OPM, other people's money.
Okay, before we go on, Professor Koh, this particular case study was from a company that is quite real, isn't it?
Yes, this is the latest financials, as in the annual financials. Of course, Apple has got quarterly reports.
Okay, so ladies and gentlemen, we are really diving into Apple. Okay, this is the real and latest financial statements of Apple. So I know this is something that definitely I will shout out in the marketing to the rest of the world. They should watch Professor Koh's show because we're diving into the financial statements of Apple. Let's continue, Professor Koh.
Certainly. Thank you so much, Vicky. So I'm only going to look at the key points because I don't want to go too complicated until we lose the big picture. So the big picture here for today, we are looking at leverage. The meaning of leverage is if I'm a shareholder of Apple, I'm concerned about my own money. So here's where my own money is. That's called the equity. So my own money is OM. And it's as straightforward as that. As a shareholder of Apple, holding just very, very, very few shares, but I like to see that I am getting a very good return on my money, and that is $65 billion that has been invested into the entire company. So when a layman says, how much do I get back for my money? They will then look at this part here. So the money made, which is 57 billion, I will distribute it among every dollar of shareholders. And you can tell it's quite a lot. The shareholders put in only 65 and they are getting back more than half. So this is how it works. Profit of Apple Inc., like what Vicky said, looking a little bit small. So this is what you have is blown to show you the pertinent. I truncated the decimal place. So we look at the big picture, 57. The total asset is what the layman calls ROI. What do I get in return for investing in the entire company? And it is not bad. Return on total assets for Apple, as at one of the latest annual report, which is September 26, 2020, is already a whopping 17.6%. Now, as a regular investor for long run, I always feel if I can get anything more than 10% compounded year on year, it has met my minimum standard of requirement. But Apple's doing 17.6. That is really, really awesome. But wait till you see. This is the profit after tax over asset. If I were to look at how much do I get for myself, because I'm one of the shareholders, 65 billion. I couldn't speak. It's 88%. It's really 88%. And that would probably strip off a lot of performance of other stocks. All right. And here is where I like to share with you. It is really not difficult. It brings you back to what we used to do when we were studying physics in your high school. You look at what I call leverage. So here is a simple mathematics. The entire balance sheet has now been summarized in different colors, moving from the pink 333 billion, which is the asset. This is what the company has invested in. Out of which the own money section is only 20% of 323, leaving the balance whereby you have suppliers to Apple, bankers to Apple, maybe Apple issue a bond. All these are people who can't wait to do business with Apple, and that is how you leverage on other people's money. Now, the simple mathematics says, if I put in $1 and I can depend on other people for 4 parts, I now have an asset size 5 parts. And this is really amazing because it really sweeps you off your feet when you look at it and say, why didn't I think as a businessman, albeit small, I could negotiate with my suppliers so that they will grant me the short credit terms, even if it means no other bankers lend the money to me. I have got my network and my spontaneous bankers. They are called the creditors. They are called the accounts payable, i.e. the suppliers. Now, this is not going to look difficult, all right? It can be overcome by looking at this. This is the simplest way of looking at. I would never be able in my dream to own a company which is 323 billion worth in terms of net book value. All I need is to join the rest of the people to put in a seed money of 65 billion. That is the capital, which is my own money. And see, this is what I call financial engineering. It comes from the word engineers, which means ingenious. The concept, the principle of pivoting can also be used here because this fulcrum here is also known as the pivot. By my own effort, no way. But if I borrow a lever, as in leverage, look at how effortless this gentleman is doing it. He borrowed a bigger lever, which is the rest of the money. There you go. 258 from all the supporters, all the business partners in Apple, and they combine this together to have this asset size that is 323. And that is how the power of leverage has uplifted a small business who may only have limited amount, 65,000, 650,000, but they depend on their network to supply them the rest in the form of delayed payment. If you can negotiate for that, then you don't have to fret that the banks are not lending you money. And this is wonderful. You know, Vicky, later on you can test me and you can even do the calculation because the 17.5%, when you multiply by a whopping 5 times, not 1 time, not 2 times, not 3, but 5 times, I call this the multiplier effect. That's how I get my
exactly. You know, Professor Koh, I think you have taught us and showed us in very simple terms. Could you go back to that? Yes. Now, yes, this graph, I think it tells very simply. if number one, this is real because we're talking about Apple here, ladies and gentlemen, and everyone is investing in Apple like a customer. I think we should start buying Apple stocks. Number one, Apple is actually the number one company. And if the number one company, they're flash with cash, my goodness, they're using other people's money. What about small SMEs? Now, it's never shameful to borrow, ladies and gentlemen. Sometimes the pride in us say we shouldn't borrow and we shouldn't use the OPM concept. But I think Professor Koh today have actually illustrated it is so powerful, this multiply effect of the OPM. Like where she has shown us Apple Corporation. We're talking about the whole world who is actually a customer buying from them. Instead of investing $1,000 in the handphone, we should be buying $1,000 worth of shares, or 10,000. I think per share is already in its hundreds of thousands already. And Professor Koh has actually shown for every $1, if I'm right, Professor, you should borrow from people $4 to leverage, so that you have a total of $5 to be working. And it also means that, number one, you delay payments. You ask your customers to pay upfront or even advance payments. Right, and that's why the power of subscription is so powerful. If you think about that, Professor Koh, the power of subscription, people are paying upfront 1 year ahead, even before the goods or the services are actually delivered to you. You think about it, that blows your mind, Professor Koh. That financial engineering that you just said really blows my mind. And we're translating it from a very difficult concept of a huge corporation, that this, ladies and gentlemen, is not in theory. It's not a textbook. We're talking about Apple Corporation. And we can, if Apple is so smart, we should always be figuring out why they are so smart. I'm very sure they have paid hundreds and thousands and millions of people as their financial consultants and financial chief operators. So now we have Professor Koh, who is actually demystifying to us the power of OPM. So take it away, the power to Professor Koh. Please continue.
Thank you so much. I think Vicky is just as financially savvy as I am. She was just telling us how they collect money in advance. So these are actually what I call down payment. This is prepaid, by the customers. And therefore it becomes a liability because they are supposed to deliver the inventory, whether it's Apple 12, iPhone 12, or MacBook, or iPhone 13, which could be coming up. So these inventories here, together with all the cash that is parking aside for liquidity, plus the R&D that is spent every year for better and better products, whether it's in a phone, it's in a MacBook, or in terms of services as well. This is really just so successful. So we must take this off to Apple. The whole concept of financial, leverage. And that's where the name comes from. It's really just a simple lever. And how we leverage on this concept to magnify the return. Imagine, Vicky, if you happen to have $323,000, you could have chopped up this $323,000 into 65,000 each, so that you can invest in 5 different companies. They will all make the 57,000. And that's how the multiplier effect. Yes, it's called leverage. Of course, if you are more familiar with the word gearing, it is the same. If I haven't convinced you, I'd like to show you how people used to say, oh, the gearing ratio of this company is something like 4 times, 5 times. Yes, it works like a gear. It works like a clock. The very low 17%, actually 17% is quite high, was magnified to become 88%.
Oh
So
my
this
God, my goodness
yeah.
me.
If I could
Wow.
just do this thing called multiply the return on investment from 17.5 by 5 times. So you choose the right year. Do not be too ambitious. And you can always start low. Maybe you gear up twice. And then you got the cash flow. You gear up 3 times. And of course, not everybody have the luxury and the credibility to gear up 5 times. I think for a small, medium enterprise, if you could start with 2 and advance to 3, you are successful.
Wow. So that's the power of leverage and the power of gearing. I mean, this applies to our personal lives we're talking about. I mean, we may not be running or owning the Fortune 500 companies, right? But it's so adaptable to all of us. I mean, it's a tool that we need to know. Professor, thank you so much. For the next 3 minutes to cap this off, Professor, could you continue for the last 3 minutes?
Sure. So after this, watching this, just go ahead and look at any company, all right? Let me tell you who is the master of all leverage and gearing. You could have
Tell
picked
us.
Citibank, you could have picked Bank of America, or you can pick my local bank. One of the best performer is now called Digital Bank of Singapore. It's DBS Group Holding.
Oh wow!
I was
this is what we're seeing now, ladies and gentlemen. Let's give them a backdrop. This is a real financial statement of one of Singapore's biggest banks, which is called the Development Bank of Singapore, DBS Group Holdings. And this is the real financial statements dated 31st December 2020. So this is the latest and the newest.
Certainly. If you look at the impact of COVID-19 pandemic, it certainly brought down the bottom line, which I'm going to bring you to. So this is the bottom line. They made a net profit of $4.75 billion. They could have made more because the year before, which is 2019, ending December, it was 6.4, but they maintained. So they did suffer to some extent in terms of the absolute dollar of profit, but lo and behold, look at the amount of assets that DBS owns is by far one of the largest, in terms of assets. We only have 3 banks. This is the biggest. It has reached almost 650 billion, but of course, this is Singapore dollars, all right? And same concept, you're going to be blown away. If Apple has leveraged 5 times, look at how much equity this company has.
How much did they leverage? I'm very interested.
Yes. Out of the entire 650, the equity portion is 55 billion Sing dollars. You can just reach out to your Apple calculator, our smartphone, and there you go. It's 650 billion, of which only 55 billion comes from the shareholders who put their money there.
Wow. So we're talking about the leverage of how many times is that? It's crazy.
It works out to 11.8. Almost 12 times. Almost 12 times.
And I understand some of these biggest banks also seek your advice, Professor Koh. Thank you so much. Wow, and this really blows our mind, Professor Koh. And if you are a small SME and you're struggling, and a lot of small SMEs, we're brought up in Singapore, brought up in this very Eastern Oriental conservative concept that we should have our pride and never ever ask people for money or never ever borrow money. I think we must totally shatter that kind of concept. And instead of that, we must really put into the whole central tenet of a business about OPM concept, which is always championed by Robert Kiyosaki in Rich Dad, Poor Dad, and so many business gurus out there, financial gurus out there. Wonderful illustration, not just talking about it, but really illustrating, Professor Koh, from real life and most recent and current examples from the smartest companies. We're talking about Professor Koh.
Yes,
Kudos to
this is
you.
just amazing, you know, and despite what is happening economically, the bank was able to leverage on 11.8 times. So, albeit the much shrunken value, they have done well, maybe not as well as the previous year, which was 1%. Can you imagine getting a return on investment of 1%? Doesn't look very attractive to you. But when you own the shares, it is multiplied by 11.8 times.
Wow.
So they still have a decent
This is
8.6.
crazy, right?
And you're talking about a bank, you know, from an investment point of view, bank is one of the good proxy for diversifying into investment across different industries.
Yeah, yeah. I think this really blows our minds, and I think this show, kudos to Professor Koh. Viewers, you must tune in, and listeners, you must tune in, because it will blow your mind if you're going to invest and use your whatever money that is in your piggy bank, that you should break your piggy bank right now and then put the money to good use, right? Investing in companies, in their shares, that will give you good returns, especially in these times whereby, you know, we are all in the pandemic. A lot of times we are not even spending the money in the shops already. We're not going out to the retailers. Our piggy bank is actually growing, right? Putting the coins in the piggy banks, and a lot of money are actually latent there, not working for us at all. Professor Koh and ladies and gentlemen who are tuning in to the show today, you will actually see, and this is actually just another preview of what's going to come with a powerful show from Professor Koh. Right, Professor Koh?
Yes, thank you, Vicky. I only have one last caveat.
Yes.
During this time when interest rate is very low, it is so appropriate to take advantage, to leverage on the low interest rate. But as the interest rates start climbing up because of inflation, and being very versatile, and then you can slowly scale back to make sure that you do not over borrow and pay too much interest until it eats up your net profit. That's all I have to share, and thank you so much for this opportunity, Vicky, and for
I'm so excited. You know, you really have blown the mind of people who are viewing this video. Either today or tomorrow, it's going to be there for infinity, right, Professor Koh? And I think we have a job to do. I think the work is just cut out for us, Professor Koh. You know, whatever knowledge that we have, we should never keep it. We should always share. And that's the job of a teacher, as an educator.
Yes, it should multiply, Vicky. It's going to be multiplier effect.
Yes, and it's a way of paying it forward. And especially times like this where we're in lockdown, you know, think about how you can leverage your money and also your businesses. Most importantly, if ladies and gentlemen, your businesses are struggling, even if you are a small SME, you are an auto entrepreneur, you are a mom and pop store, you are a solo, a sole proprietor for your business, I think that it is time to leverage and not be ashamed to go out, because that's the key tenet of a business. You have to use the OPM concept. So to wrap up, ladies and gentlemen, my final word is that this is actually a preview for the shows to come, for Singapore to actually pay it forward to the rest of the humanity. And you can see that we are giving really very simple tips, but from real concepts that actually made it so simple for us to understand and digest in our hands, and in the words of Professor Koh. Thank you so much, Professor Koh. Another 10 seconds for you to say goodbye.
Thank you so much for this opportunity of sharing it with you. I like the multiplier effect. May you share it with as many people as you can reach out to.
Yes, thank you, Professor Koh. I will tune into your show again next Thursday and Friday with us from Singapore to the rest of the world. Bye.
Bye-bye. Thank you.
Hi, everyone. Thank you so much, and welcome to this News and Views series, new season. And I'm so glad to have a new friend all the way from the United States. And before I invite him to introduce himself to the rest of us and to the new viewers and the listeners, also on podcast and on radio, on Talk About Live and on IOW Network. But this show is going to be played on YouTube, Talk About Live, and it's going to be also played on the #1 award-winning professional podcast TV, Lifestyle TV USA by Dr. Moby. Thank you so much, ladies and gentlemen. And today we've got a new season for you, which is People and Life, You and I. We're going to talk about issues about life, career, education, trade schools, and a lot of observations about life that I think as we progress in life, we look back, hey, why haven't I done that? Why did I make that stupid decision? Shouldn't I have done it differently? I think it's a lot of times we kind of like sit down. We have to take time to sit down, ladies and gentlemen, and reevaluate our lives, no matter how busy we are, because we're in this world, especially in Singapore, we're always told to go, 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 forward, forward, and now everybody is just zoom, 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 right? We never have a time to sit down and evaluate our lives. But you know, evaluating is so important. Even as a teacher, as an educator myself, I always tell the students, right, before you go to the next lesson, you got to stop and review your lesson before you go on to the next lesson, so that you can learn from the lesson in class. And that's what homework is all about. It's about review and learning, and then redoing it in a new way. And I think a lot of us as adults, we forget about this reviewing of our lives. And a lot of people do not. They do that for their careers. Like, okay, this is my project. This is my engineering project. I find that, okay, there's weakness here. We need to have an evaluation of the project, the strength and the weaknesses, and then what can we do? And let's troubleshoot, right? But we forget that as a life in totality, and what has the pandemic taught us, ladies and gentlemen, we have to sit when the world shuts down to really evaluate many aspects of our lives, our relationships with ourselves, our relationships with our souls, our relationships with our spirit, our relationships with our family, our relationships with our loved ones, relationship with money, relationship with the future, and in general, life as a whole. And I think a show like that is very important for parents, students, adults, people in their mid-careers, or even people who are actually at the new season of their lives, for us to evaluate, hey, what are these questions we need to think about? And let's start a conversation about life and people. And I have here Mr. Ralph Ave from the United States. He has had an illustrious career, but very humble, down-to-earth gentleman that I've known him for the past few weeks, and I've invited him to be my co-host for the next few months for this show together, People and Life, You and I, to talk about these issues about you as a parent, as a professional, as a young adult, as a student, or as someone who's actually being displaced in the world, displaced in many ways, displaced because you're divorced, displaced because your job is being taken away by the robots, displaced because you are being disrupted by the pandemic, displaced because your business gets disrupted. So I think we're in this time of humanity that things are being jolted out of our comfort zones. We are going into a new normal with masks, without masks, vaccination, etc. So I think it's so important, this show. And I bring to you, ladies and gentlemen, I'd like to present this show. I think the significance and the philosophy and the thinking behind the format and the making of the show is so important because it brings our heart to the show. And I'd like to welcome Mr. Ralph Ave for being a wonderful co-host to dive into these life issues that we may have missed when we grow up, right? Mistakes that we should not bring it to the next generation. I would say that learning points instead of mistakes, but learning points that we should always bring forward to explore and then to expose. Thank you so much, Ralph. Welcome to Singapore, and it is 7 p.m. Singapore time on the 28th of August 2021. We are making history. Ralph, welcome to Singapore.
Thank you, Vicky. Thank you for the introduction. Yeah, it's about 4:18 a.m. here, but it's a great opportunity to be here. Thank you again for inviting me on here. A little bit about myself. My name is Ralph Ave. I was born and raised in Hawaii to Filipino parents that migrated over. And at about 9 years old, I lost my dad to alcohol. So from then on, I was just in a single parent home, not living in the most well areas, but my mom did everything she could, working 2 jobs, making sure I had enough. And just going through that life, it taught me a lot. It taught me how to persevere, how to keep pushing forward, and how important it is to be around the right people. And going through that, after high school, I went to a community college because my grades weren't good enough. I wasn't the best high school student. And I said, you know what, let me try trade school. I ended up graduating cum laude at the trade school under electronics, but the job market wasn't that great. And I always had this need to serve my country, the US, because of the opportunities that, it gave my family when they migrated over to the United States. It was somehow some way to pay them back.
Wow.
And so after that, I went in. I didn't tell my mom because she really didn't want me to leave, but I had to cut the cord. And I said, Mom, I didn't tell her till 2 weeks before I had to ship out to basic training.
Wow.
Yes. it was hard because I knew I was leaving her behind, but I know she was taken care of because she was around a lot of good people. And I just had to do something for myself. And just going through all of that, it taught me that whatever you go through, it's the choices you make, no matter what your situation is. It's so easy to go down the bad path.
Yeah.
And it's always hard to go to the easy, not the easy path, but the right path, right? But it's always down to that person's choice. That's what I've learned. So it's up to them.
Yeah, I think Ralph, a lot of us in a particular part of the world, especially in emerging economies, I'm talking about in many countries, right? We are not, we are in an emerging state in many countries, also in many communities in first world countries. There are emerging families that do not come from, they are not born with a silver spoon or that golden spoon in their mouth. And not many of us are like a Paris Hilton, right? You know, yeah, you know, but I like you know, while we're here, Ralph, and because we are doing the show together, and I'd like to welcome you again, Ralph. You know, this is such a significant show for us. Number one, yourself, your story, you know, you coming from a single mom. My dad passed when I was seven, 8-ish, from liver cancer. So I do understand how a single mom feels and how they struggle as a woman. There's no help around.
Yeah.
But I will tell you my story a little bit later. But you know, this show, ladies and gentlemen, I think Ralph has actually put it in a very beautiful place. I think a lot of us started with not a lot. Not a lot of rice in a pail, not a lot of food in the fridge, not a lot of dollars in the wallet, right? I always say that there must be times in your life or in your parents' life whereby you think through. They must have a time whereby they look at their wallet or their purse. There isn't a lot of coins and they're counting even the smallest coins, right? And I think this is a time whereby, ladies and gentlemen who's viewing this, and also Ralph and I think this show gives its significance because it's a time whereby we evaluate life whereby, hey, our forefathers actually started off with nothing. But here we are. We have good shelter. We have got a career. We probably have got some money in the piggy bank. We probably have got some extra pair of hands that we can help another person, right? I think it's a state whereby we are able to help, and because of the internet world that we are in, I think it's time that we also give back. And also with Ralph's career as a career professional coach, you know, he is also a career professional coach, which is beautiful because he came from this illustrious career as a retired chief master sergeant of the United Nations, United States Air Force. And that's a big mouthful. United States of America Air Force. And you're the first, I should say they're the top 1% of the Air Force. And with a lot of ranks here and a lot of colors here, you know, the lay people, when we look at it, wow, you know, it's such a huge accomplishment. And thank you, sir, for serving humanity in your particular arena for what you have done. So Ralph and myself, and with his story, I would like to present to you the first episode that we have here. Ralph, tell us about your career now. You know, now that you are a retired Chief Master Sergeant, a little bit from Sergeant from there, and then going into your new career, what you do, and also your book.
So after my military career, or I'm part of the civil service for the Department of Navy. I'm still that now while I'm transitioning into this entrepreneurship world. And well, currently I'm a GS-12. A lot of people don't understand that rank, but it's considered up there. But, you know, like I was telling Vicky earlier when we were talking on, it is, you know, I don't really get excited about stuff, even with my accomplishments, because it's just you're happy for that moment, and then the next second comes, then what do you do? You know? So what's great about my job right now, I work with a bunch of veterans and we all work together. We can do shop talk. You know, we don't have to worry about if we're offending anybody or not, because we all have military backgrounds, and that makes it really comfortable to be around, and we have each other's back. We still have that camaraderie. You know, one's a Marine, he's a retired sailor, and then I'm an Air Force guy, and we all just get along really well just because we know we have that understanding of being a veteran, and we're still in the environment where I'm fixing test equipment and they're doing the logistic stuff, and we just continue working together. And one of them I actually coach basketball with, so it's been a pretty good career. And somebody that I served with told me, hey, your leadership is different and you still made it to the top 1%. Why don't you write a book on kind of like how you are and how you made it up there? Because he said he served with me and it was not the norm of how people led.
Ralph, what's the name of your book and where can we find it?
So it's on eJunkie. I'll send a link, but it's on eJunkie. It's called the Modest Leader, Leading Harmony.
Yes, I think it's called The Modest Leader. And we should talk about your book in our future, podcast, and definitely, splice it in about that. So, ladies and gentlemen, that we have Ralph. Welcome to Singapore, ladies and gentlemen. Ralph, I was, an educator. I've stopped teaching for some time, and I'm here in Singapore in kind of a semi-lockdown, kind of like a self-chosen isolation stage, because we're doing this. I find it so meaningful. I'm coming up with a lot of shows that the audience will know that I find it's so deeply meaningful that we're able to share stories, even touching someone in this world. I think not because we are big people. I think that's not the right kind of way to look at us. But I think because we have got, everyone has got their struggles. And I think that if we learn from our struggles, I think collectively we are able to become better human. And probably someone else don't have to go through the kind of pitfalls. So I think with that kind of spirit, that's why the show is being made. And Ralph, can you tell us what kind of trade were you in before you go into the Air Force?
I was a sales associate at Office Max as an electronics associate. So I was in retail, and I hated it because it was part-time. I didn't feel fulfilled. It wasn't fulfilling. It wasn't something I felt I was meant to do. Retail is a very customer service based job where you get blamed for everything, even though it wasn't your fault, and you still have to sit there and smile.
I think a lot of us share that sentiment.
Yeah. And so after 11 months of that's when I decided, let me look into the military, because it was always something I wanted to do. And I loved airplanes. I could name, all the airplanes that were flying in the air, because we had, Hawaii is full of military bases. And I figured, well, let me check out the Air Force. So after 11 months, I went into the recruiter's office. And when I walked out there 2 hours later, I had a ship date. So I signed up right away. That first day I went into the office, I signed up right away. The recruiter did his job.
Yeah.
But
and that brought us to our question today, this conversation that, you either yourself or somehow you got yourself enrolled into this trade school. And we're talking about in a world whereby probably in America or in Singapore, I can only say that in Singapore, but later I'll give you illustration whereby I was living in France for some years. I'll tell you what they think about trade. Being an educator myself these years, I've taught in the polytechnics a good part. I've taught in two polytechnics, and I taught in a vocational institution, and vocational school, which I think is likened to a skills-based trade school, because they do teach trades in there. In Singapore, we call it the vocational education. And I also taught in polytechnics, and I also did sometime a stint in the university. I think in emerging economies in the world, we're talking about emerging economies like Singapore, Hong Kong, Taiwan, all these, or even in first world countries, right? Europe, America, and you're from Japan. There is a lot of emphasis on going into a school. Your parents wanted to be in an academic school. And of course, the first thing you want is that you want your child to have that degree. You want your child to have that master's, and you want your child to be a doctor, or a lawyer. That's the first thing that goes through the mind. And I think also, even in Singapore, very few parents want their children to go into the arts or sports. Even if they have got a good illustrious, sports, a lot of sports awards, no parents will want their children to go into musical, the arts, or the sports, because it's a place where you can't get a lot of money, right? To be very crude and realistic about it. And it is the doctors that bring back the kind of bring back the bucks, right? The money, the lawyers, the doctors, and they can actually elevate. And I don't think that is wrong, because in Singapore, or in an emerging country, even in China, Vietnam, Cambodia, even in third world countries, to alleviate out of poverty, right? Going to the school and getting a degree is the only one way that everyone knows. It is a classical way. And that's why in Singapore, women are really well educated. Women are well educated. The Singapore man kind of finds that getting a Singaporean woman is too daunting because they go into debates. And that's why my husband and I is he keeps quiet and I win all the debates. So, but I'm just saying that, however, it's come to a curve right now in Singapore that the emphasis is gone back to trade, surprisingly. Because there are two scenarios, Ralph, to share with you. Number one, there are too many degree holders, right? Kind of too many cooks spoil the broth, because everybody wants to get into the debate and not do the work. And number two, there is a huge vacuum now. There aren't people to fill up their real gaps, skills, the skill set. Yeah. And then there is a re-paradigm shift, and people are being paid higher now with skills, rather than people who just put on their thinking caps and think that, I'm talking about strategies. Because if you want to talk about strategies, 101 people can think about strategies, but the skill, only the person can do that skill. Like, you want to have that button, you want to have that line, you want to have that code. If you're talking about trade and people who really use their hands, coders are also a trade and a skill. So, there is now a re-paradigm shift in a whole debate in Singapore that the education now should not be tilted towards trade, but the mindset is still there. It's like, okay, I don't want my child to be in the trade school. I don't want my child to be in a vocational institute to learn that kind of hands-on thing, even though there's policies that's trying to say that is what is needed right now. We can't depend on the foreign workers because we're paying them higher and higher. And if you want to drive a crane in Singapore, it's one of the highest salary that can earn more than a CEO. Okay. For people to be able to drive a crane, right? Because you need a lot of skill to be able to balance. So that is a kind of undercurrent struggle that the Ministry of Education is going on. How do we change mindsets? We've been in an economy that people are saying that, hey, you got to get a degree, you got to get a master's, you got to get to be the doctor, you got to be the lawyer. That's the only one way. But now everybody is saying, no, that's not the only way. There are people who got the degree and they still fail miserably, right? There are people who aren't able to cope in a real world. So then that's why the debate starts. You as a father and you as now a professional career coach, what do you say, Ralph, about this trade? And there is always two argument to this trade school.
Right. So my experience was I was looked down upon when I went to trade school, not realizing that that was probably the best decision I've made, because I've seen friends that had degrees and they didn't even use it. They went into real estate, they went into other career fields, and they had 4-year degrees. And I'm like, but you knocked me for going to trade school and I'm still using it.
Yeah.
Because when I went into the military, I was a aircraft loader, weapons armament systems. And what we had to do, we had to load the aircraft with munitions. And then if something went wrong, we went in there and troubleshoot the armament systems of the aircraft. So it kind of tied into my degree. So I was actually still using my degree, even at the earliest ranks of my military career. And I think that the mindset, people don't realize that 4-year degrees, a lot of times they're theory. They're not really hands-on. And trade schools, they teach you right away to how to do things with your hands, how to apply things, how does this work? How does this work? And they let you go figure it out, go play. That's how I look at it. I got to play with electronics, so. And then I did the same thing in the military. So it kind of translated over. And my mind, because of that, my mindset now with my kids, like my daughter, she loves basketball. And I told her, if you're good enough and overseas is willing to pay you to play at 18 years old, I told her go. Wow. Because universities will always be here. If you really want to go back to school, you can go over there, save your money, and go back to school if you want to. Or you can invest in whatever money you make and make that money work for you. Because right now, I signed her up for a custodial account to do investments, because I want to teach my kids to make their money work for them, have that mindset. Like, a university degree is not everything, because I'm okay. And I don't have a bachelor's degree. I'm working on mine now, but it's one of the passions I've developed going through my life, which is like video editing. So I'm going through Futsal University, taking digital cinematography. That's just a passion of mine. It's not something I want to look into a career for. That's just something I want to do as a hobby. But they do offer a bachelor's degree for my GI Bill. And I said, you know what, I'll do that, because I'm already set in my career and I want to focus on this entrepreneur thing.
What does your wife say?
So it's like there's that debate.
Okay, yeah. Tell us, what does your wife say?
So my wife's more about the education stuff, because like my daughter, she played for 3 basketball teams at one point, and they said, what about her school? And then after a while, she graduated with like the President's Award. I think it was like cum laude, 3.0, 3.5 average. And I said, there you go. She's doing what she needs to do while following her passions, and I told her, don't pressure them degree, because there are other ways to be successful.
Okay. Ralph, we're on this podcast where we talk real. Tell us about the quarrels that actually went on.
So when my daughter or my other kids, when they fail, I don't really get mad at them. I tell them, okay, why did you fail? How can we figure this out together? How can you figure this out? That way you can come back from this, because we're not always going to be here as a crutch for you. And that's what I tell, like my son, he failed in 2 belts on Taekwondo. He failed his brown belt, and I think he failed his first black belt test. And I said, okay, whose fault is it? And he took responsibility. And I said, what do you have to do? He said, I have to keep practicing. I have to work harder. And I have to prove to my instructor that I can do this. I said, that's exactly what life is. It's going to knock you down. But it's how you come back from it. And my wife is more, why did you fail? What's wrong with you? Why aren't you doing this? Why aren't you doing that? And I'm like, stop. It's like, that's not helping them.
I thought that is important, because it's exactly the debate that we have on a macro level here, in Singapore, that the government is trying to tell young people, right? Okay, degree is not the only way. Because a lot of people with the degree, they do fail, and they're not able to. I mean, what the pandemic has shown, I think, Ralph, is that a lot of people aren't able to pivot because they've been so structured in that this is the only way I'm supposed to do. And sometimes structured education, I'm coming from an educator myself, there is a lot of good in structure. And I work a lot in structure. That's why I have a structured timetable for my podcast, right? You know, Thursday to Monday to Tuesday, I have a particular structure that works for me. But I think we are in a world whereby we are always being disrupted now. We are in this industrialized world whereby we are moving into the unknowns, right? We don't know what the world is going to be. I mean, Ralph, you and I, we don't even, I mean, look at what's happening to the governments right now. If assuming that they've got the best brains, the policymakers there, they don't even know what's going to happen next month. They don't know what's going to happen next month. Should they open? Should they close their border? Should they have the mask on? Should they not have the mask on? Should they let the planes fly out? We're talking about a world whereby even the supposedly the best brains, right? They don't even know. Let's talk about the virus. We're talking about the best doctors. Now they're saying that, oh no, the virus doesn't work this way. The virus works this way. No, the virus works. I mean, we're talking about people don't even know the world now. So I'm really looking at that. Hey, if we are too rigid in our one tunnel vision, I mean, let's just say that a tunnel vision method. If we look at the classical method whereby our parents, our grandparents, you know, they say, okay, you've got to do this because this will lead to this result. I think that kind of formula fails already. So I'm not saying that it's bad or it's good right now. I'm just saying we're moving into the unknowns. You could possibly be going somewhere that I never knew before. So I don't think we are in a world whereby any teacher or any parent can tell us, another generation, the world is going to be like this. You've got to do this because your world is going to be like. I don't think we are that particular situation. We can tell them exactly like, okay, this is the tried and tested formula. And this tried and tested formula, you should adopt it because it's going to kind of reap you this result. I think we are in a world whereby we can't give that anymore. We can only give them the skill set. Like, okay, like what you say, when the times are down, when you are being knocked, you got to get up, like what you told your kids. And I think if we don't teach the kind of skills, the kind of survival, the kind of resilience, the kind of being able to pivot, being flexible, spontaneous, and being a survival skills and how to thrive and survive in when you are being disrupted and disrupted again, I don't think any young people can survive. Ralph, what do you think?
No, especially what you said, if it's too rigid, too tunnel vision, I've never thought that way for some reason, because I guess it's how I grew up. You know, because I had to make the choice. I was alone at a young age, and I had to make the right choices for myself. Yeah. And when I failed at something, I got punished. So, But I said, you know what? I'm not going to go down that road no more. Some people will just keep getting worse and worse. And I'm like, you know what? I need to better myself. So every time I try to keep bettering myself, and I try to instill that into my kids, you know, that failure is okay. As long as you come back from it, you know, we can't be stuck on this tunnel vision. And even when I coach these girls with basketball, they get this tunnel vision because they're only looking one way when they have somebody right next to them wide open where they can pass the ball to, and they panic. And I said, hey, do this. That'll help a lot. You know, so
looking around helps a lot. You know, back to the trade schools, and you're right to say that a lot of people, like I think like your wife, right? She feels things that, okay, going into sports is a no-no, like Singaporeans parents. If the child is going to be musically talented, want to go into music, the parents will say no. And then, you know, if the child is a good swimmer, you know, it's always that it has to take a second step back. And, or like what you say, you have a particular trait right, to learn electrician, to learn plumbing. But now we're actually told that the old season and old generation of the electricians and the plumbers, they're all retiring. There's a lot of vacancy of the jobs. And I think that in the world, there's millions and millions of jobs for the electrician, and they are being paid a lot. I mean, per visit in the house. It's a business. And I'm looking at how do you, when I was a lecturer for entrepreneurship, just to share with you, Ralph, as a lecturer, when I was doing entrepreneurship in a vocational school, we call it the Institute of Technical Education. Technical replacing vocational, replacing the word trade or skills. But really a lot of it is using your hands. Nursing, right? One of the most well-respected jobs. But it is still like not the most prestigious job. Right. I don't know why. I mean, it's such a job that a lot of people can't take on because they just can't take on the tremendous amount of pressure of a nurse. It's a huge, tremendous job. Nursing is not given as much position in a society like in Singapore, right? But of course, we're talking about Australia. In Europe, they are given a high position like a doctor, right? A lot of countries still need to catch up with that. Nursing, plumbing, car mechanics, electrician, repairing of the phones, repairing of the hardwares, etc. So that was the school that I was teaching, and I was teaching entrepreneurship. And one of my passion is that how do you teach a trade? Like, for example, we're also teaching students makeup. So how does a girl, you have lots of influencers right now, right? The influencers will go on and then they will say, but can you imagine even makeup, we have a school for that. And we buy the best makeup for them from the French brand so that the kids can learn at the age of 18, 19 makeup from bridal, and they're paid like $3,000 for 3 days, and a lot of money for business, right? And people don't know that it can be respectable. And I think the world has not seen a couple of things. Number one, they measure prestige with the amount of money you make if they know that you can make a lot of money out of that. Or number two, we haven't been able to brand that, that this is it. The students are told not to choose that because it doesn't give you a good kind of brand, professional brand. So what our schools did was, if you hear my conversation with Mr. Eden Liu, he was one of the forefathers of all these technical schools. How do we make students because nobody's really wanting to go into vocational institute. And then to tell you the story, Ralph, what they did was that the Singapore system, they made the school like a 5-star hotel. If you're going to train them into hotel management, like housekeepers, this is a trade. How do you clean a room, right? You've got to have a clean room, right? I mean, a 5-star, 6-star hotel, talking about the Marriotts, you're talking about, all these Ritz Carlton, the Ritz, right? And then we're training them, like making them like do the housekeeping. You're talking about the whole management concept, how you manage, what is the system, what is the SOP. There's a lot of management skills in it. I don't see why people should look down on there. A lot of things that go into it, whichever skill that you're talking about. And we're teaching the next generation to respect their own skills and not look down on themselves. I mean, there's a lot of pride involved. And we are trying so hard to let students themselves feel that pride when they take this on to say that, hey, I'm taking this job because my grades can't meet the other schools. I think we're trying to take away that stigma from the parents, the mindset, and also from the students themselves, and also the teachers. And the teachers will...